Alright, this is our Forex blog for January 8th, 2014, and these are our currency indexes: the dollar, yen, pound, euro, and we have the other ones as well, the Australian, New Zealand, CAD, and Swiss. It shows you as a chart what each individual currency is doing. And basically, in a nutshell, what you want to do is find a currency like the New Zealand that's trending up, where its daily, weekly, monthly trend is also up. You want to look for buys in that versus one that's weak. And preferably underneath its hourly moving average or the previous day's low, as you can see here in the CAD. You have a double top right here in the CAD. The longer term trend's down. The New Zealand strong in this example. So you want to buy the strong New Zealand versus a weak CAD. And especially at 9 o'clock right here. So you can see by looking at the chart, 9 o'clock, you can see it went up, a little bit of a pullback, up again. Now these are pretty small moves. I just picked that one randomly to show how this works. Let's go ahead and get a different, one of the more popular currencies. You can see the dollar was trending up a good part of the day. Again, later in the day, the euro was trending up. Ran into trouble up here at the highs. Notice it can't get over that high. You also have a little wedge pattern developing. When it breaks out of that wedge and breaks from above to below its hourly moving average around 3 o'clock here, that's a trend that you want to be selling versus the strong pound and the pretty strong dollar. So let's bring up that chart just for illustrative purposes. And basically all you want to do is look to sell that. Again, especially around 3 when it breaks down. You have a nice little pullback right here, here, here. And you can also use our Forex FX trade signals that just pretty much tell you when to buy and sell. It's very accurate, which I'll show right now. You just want to go to FX trade signals. Actually, yeah, FX trade signals. This is the one I use for demo development. You won't have that option here for regular signal, but you can also click show stops and it will show you exactly what you're about to see now. Okay, as you can see, this does a very good job of giving a sell signal here with a nice 22 pip win. Another sell signal right here with you're out of this trade right here, nice win. You're in this, you flip and you go long right here and you get stopped out with small loss. Small loss. Now I'm going to tighten these stops. I have a little wider stops in order to catch some up-down type moves. This one right here is a small win, then you have a loss, and then you have a nice win. And pretty much, very small, almost break even. And the key to trading really is to just have losses that are much smaller than your wins. When you have wins of this size and this size, and losses of this size and this size, you tend to, it's the biggest loss of the day. Nice win. And we can scroll back and show this tool on previous days as well. You can see this day loss, small win, 8 pip win, big win, nice win, small 4 pip win, loss. I guess this got stopped out. Then it has a huge 30 plus pip win with a loss here. The key to trading is small losses, big wins. So again, one of the easiest ways of trading is to look at our currency indexes and see which ones are weak, like the euro. The pound's quite strong, so you could be looking to sell the weak euro versus strong pound. And as you can see on this chart, some places that I would consider getting short would be on this little pullback right here. This isn't quite enough of one. Anytime a currency goes sideways for multiple hours, in a little rectangle pattern like this. When it breaks out, it's a pretty high probability. Anytime you have a low volatility, at least for an hour and a half or 2 hours, this one's for much more than that. When it breaks down the low right here, you go short, and you put your stop right above the high, and what you can see is this is your risk, and it made a bigger move than what your risk is. And you know, if you're a little bit more aggressive trader, you can actually put your stop right here and have a tinier risk. And that's the key to trading again. Small losses, big wins. And one nice way, once you see a trend that's coming down, is to kind of eyeball a trend line off the bar's lows. And when it breaks that, you go short, your stop's right above here. Even this trade right here, your risk versus reward ratio is very substantial. This is your pretty much your risk. I drew that a little bit wrong. Even on a small win like that, your win is 1.5 to 2 times bigger than what your risk is, and that's the key to trading. Yeah, you know, and if you're a little bit longer term trader, you can just move your stops down every time it makes a new low and has a pullback. You can just tighten your stop. For instance, if you got short right here, your stop's above here, it makes a new low and pulls back. There's your new stop, pulls back. Here's your new stop, pulls back. You know, here the stop pretty much just stays the same, pulls back. Here's your stop. It doesn't make a lower low here, and you get stopped out. So you can, you know, whether you get in and hold your positions for hours and hours and hours, or you get in, out, in, out, in, out with very, very tiny small losses. It's up to you. Many ways to trade.